Thank you, Margaret. A very good afternoon, everyone, and a warm welcome to our Q1FY23 earnings conference call. Having made the financial statements and earnings presentation available on the exchanges and our website, we hope you all had the opportunity of its pre-read. I would like to start this call with the overview of the current status of our company and the strategic outlook in the near future quarters. We present Fineotex as India's leading specialty chemicals producer, having wide footprints across domestic and international textiles industry ecosystem. We continue to focus on expanding the market by developing new products, entering into newer territories, offering value-added services like textile solutions in specialty chemical sector, and thus create brand image and goodwill for our products. And this is truly reflected in our performance over the last many quarters. Our venture with Fineotex, which is mainly into R&D and product development, has been fairly successful and is bearing fruits in terms of industry acceptance of its environmentally positive range of products. We have been able to successfully leverage Fineotex's strength and potential to dive deep into many American, European, and Asian markets. Market expansion is the key to us rapidly create strong brand visibility and loyalty with both Indian and international customers with our products and solutions. As far as finances, we have been extremely judicious in our investment decisions, which are mainly undertaken with internal accruals and keeping a strict control on debt management. We also value our employees as prime assets and thus partake various employee-friendly HR initiatives to promote a culture of owning one's own actions. We trust and believe in the long run, this culture will imbibe a great sense of ownership for driving the efficiency and innovation among the employees. Sustainability and environmental protection are drivers which are always considered while developing new products and manufacturing. We overlay our extra emphasis on ESG-related practices and compliances as a way to drive stakeholder value. With this, I would now request Arindamji to walk us through our operational overview.
Very good afternoon, everybody. Thank you, Aarti, and warm welcome to one and all. We at Fineotex are a well-diversified company with a wide range of product portfolios. Started producing first the specialty chemical for textile industry and later have into related products for niche segments, hygiene products, and oil and gas products. As a part of value-adding offers, we also provide high-end customized solutions to our key clientele, mainly riding on the customer confidence in our products and our brand equity in the market. Our R&D strength in producing eco-friendly and sustainable products and alternatives of hazardous products, which our overseas facility has provided the necessary impetus to expand our presence in many key international textile hubs in recent years. Our timely foray into emerging high-growth products like hygiene and drilling specialty provided us a huge potential to productively engage with India's leading detergent makers and premier oil and gas companies. As you all well aware, Helgard, Australia, Sasmira Institute for R&D, and Eurodice ETC, Belgium, our strategic partners, continue to provide us the stimulus for our market developments in last 1 year and find the relationship mutually beneficial. We continue to explore opportunity for such alliance in future to grow our business in a rapid force in future. Now I request Sanjay ji to guide us through the quarterly performance of our company. Over to you, Sanjay ji.
Thank you, Arindam ji. Good afternoon, everyone. So as you are aware, we had a very good commendable performance in the financial year 22. strongly led by our capacity expansion at our new facilities at Ambernath. The sudden spurt in the demand and the order booking led us to plan for this capacity expansion, which is expected to fructify soon. The facility was built with latest technology adhering to the strictest sustainable standards, which has proven itself the merits, and the same will be a test case for our future portfolio product expansion efforts. At FCL, we continue to be optimistic of the bright future of the specialty chemical industry. Let's say most of the economical indicators are seeing better pre-pandemic figures. India is emerging as one of the growing economy amongst all the countries across the globe, showing recessionary indices, social political stability, thriving democracy, transparent and open investment opportunities are also an ease of doing business, untapped consumer markets, availability of low-cost skilled demographic, and the other skilled laborers are the factors which drive the global optimism towards India, and thus leading many capital investments moving towards India. Various innovative policy indicators by the government, from monetary policy and credit policy by the RBI, has further strengthened the infrastructure climate and therefore providing significant domestic manufacturing and exports. In line with our strong performance in the financial year 22, we continue to remain a commendable performance in the Q1 financial year 23. This reinforces our strong belief in the future of our industry and in specific Fineotex. Our last quarter growth is on par with the growth seen in the previous quarters, or even exceeding that to some extent. Our Q1 growth is much beyond our expectation, which will hearten all our stakeholders. Under fundamentals of the financial performance, let me take you across that. Our operational revenues have grown up to 1,358 million, which is up by 115% year-on-year basis in the Q1 financial year 23. Similarly, the EBITDA also has a growth of 167% and touches 262 million. Year-on-year basis, the growth is 167%. And the EBITDA margin stands at 19%. PAT stood at 203 million, up by 110% year-on-year basis. PAT margin stood at 15% in Q1 financial year 23. Our overall capacity of 104,000 tons is almost coming to the commissioning stage, and it has already reached 65% of the current capacity utilization. The current capacity is 83,000 tons, of which we have already touched 65% in this Q1. The Q1 performance will be a benchmark reference for our future performance. It will open new challenges to seek opportunities to grow the market while maintaining sanity in our cost structures. We continue to focus on exploring strategic opportunities like new and viable alliances, capex, and also tactical internal measures like innovations, efficiency building, and cost optimizing. Overall, we intend to be the torchbearer for the specialty chemical industry by setting up of new benchmarks, industrial standards, product and client diversification. This will pave a way for us to grow and become the industry leader that will increase our brand equity in the coming times. We continue to focus on the expectation of our stakeholders and will take on all the challenges on a positive light. Now I would like to open the call for an interactive question and answer session. Over to you, Margaret.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Dhruv Singhajka from Monarch AIS. Please go ahead.
Yeah, Sanjay ji, good morning and congratulations on a good set of numbers. If you could share the volume number for the first quarter, I reckon it was 10,500 tons for Q22, which you had shared earlier. So what is the volume for this quarter?
The total volume for this quarter, there has been an increase quarter-on-quarter basis by 25%. This quarter, the volume is 13,500 tons approximately.
Okay.
And if you compare on year-on-year basis, it is almost 3 times.
Okay, 3x year-on-year, okay.
Year-on-year basis, and quarter growth is almost 25%. So as you rightly said, in the quarter 4, it was 10,500 number. Now it's 13,500.
Right. And the second thing is, going as per your earlier calls, we always do that, with the current large base coming on the installed capacity side, we would see a higher number in terms of revenue and EBITDA for FY23 onwards. So are you targeting a 750-800 crore top line this year itself? Because the first quarter seems to be taking us on that path for this year itself.
See, as you might have seen, our overall performance from the last financial year, quarter-on-quarter basis, like quarter 2, we had grown up by 64%. Quarter 3, we grew by 81%. And that trend has been continuing even now. In this quarter, we have grown by almost 115% on the revenue side.
Right.
So, broadly speaking, there are a lot of efforts and planning which our company and team members had done a couple of years back. And one by one, things are shaping up in the right direction. Right. So, this is the trend which we expect to continue going forward for. However, there can always be certain surprises and the demands, and if there is certain kinds of COVID or something external factors, of course, that will also have to be factored in.
Right. And so just the last thing, that as you said, 65% of your total installed is the capacity utilization for the first quarter. So how are we planning on forward capex in the future? Okay.
So here it goes. As such, we commissioned the plant last November 21, sorry. Okay. And that time the capacity installed was almost 36,000, which we could optimize to 40,000 tons. I'm talking of the Amarnath facility.
Correct.
Where all the growth parameters and planning is being done there. So when we did that, we were expecting this to ramp up in a couple of years or something like that. However, due to the increased demand and things like this, we already are working towards an increase in capacity by 21,000 tons. So the current 83,000 tons will become 104,000 tons, let's say from 1st of September or something like that. That's what we have planned for.
Okay.
So that's extra capacity which is already upcoming, and that is also we are looking at how do we ramp up that capacity also.
Okay, so post this 21,000, do we have extra land available, or will it be a greenfield post this?
So the Amarnath facility has enough of land spaces and all the certifications and permissions and the infrastructure cost, everything has been laid very well. It's one of the state-of-the-art plants which many of the investors have also visited. So the point here would be that we are having sufficient capacity, and even if we want to expand to another 40,000 tons capacity, we can always add another 40 there and touch almost a number of 150,000 tons given in the future without having another land parcel to be looked at.
Okay. That's great to hear. I'll come back in the queue. Thank you so much.
Yes, thank you so much.
Thank you. The next question is from the line of Nikhil Rumta from Nippon India Mutual Fund. Please go ahead.
Yeah, hi sir. First of all, congratulations on a great set of numbers.
Thank you.
Sir, just a couple of questions. First is, our other expenses is significantly lower in this quarter. It's down by around 35% QOQ. And that is the same is reflected in the margins itself. Our gross margin is down by around 400 basis points, whereas EBITDA margin is up by 200 basis points because of these other expenses. Any one-off here?
No, I'll just tell you what is shaping up. Like, as you know, there has been a lot of pre-operative expansions and pre-operative costs for the Amarnath. So a lot of expenses were one-timer. I wouldn't say one-timer, but as in when we increase capacity, manpower, there is a lot of upkeep on the maintenance and things which keeps happening. So that is also the reason why the other expenses are looking lower. There has been improvement in the freight cost also. As you have noticed in the last couple of months, the freight cost has also gone down. At the same time, what we have been doing and focusing upon is we are more focused on the EBITDA margins. The way to look at our business and the product line is always making sure that the targeted EBITDA margins are maintained, and that is what we are looking at. Because in our business, as you have been knowing about it, we have the entire range of product line. There are certain products which moves in packages and togetherness. So what we look at when we are offering to our customers the entire package, what is the EBITDA which we can get out of the entire package, but however making sure that the gross margins are still around the similar levels. So going forward, I think this is the optimization levels which we are coming to from the expense point of view. At the same time, the way to look at our company and the way we look at our focus is on the EBITDA margins always, which has been decent enough if you see the 11 years of listing, you will always find our EBITDA margins have been always minimum 15 to 20%. Even if you go to a quarterly basis or something like that, you will still find out of the 50 quarters or 45 quarters of the last 11 years, you will always find that is the way we look at our company. Because our company, our focus area is more, we are not only a manufacturing of specialty performance chemicals. There is an important part, a technical solution which we are providing to the customers. Now that technical solutions is something which is the reason we are able to have a differentiation and a sticky markets, and that is what we adhere to with the EBITDA margins focus. Mr. Rungta, are you there?
Hello, can you hear me now?
Yeah.
Yeah, actually why I asked this question is because if I look at the gross margin of the past 25 quarter, this is the lowest gross margin which we have reported. But in terms of OPEX as a percentage of revenue, that is other expenses, that has always been in the range of 14 to 17%, whereas this quarter it's 8%. So is there any reclassification which has been done from other expenses to gross our manufacturing expenses which led to this classification, or we should start ignoring these things and start looking only at EBITDA margin?
I think the way we look at it is always the EBITDA margins, because also looking at the new healthcare hygiene chemical businesses where we are getting more stronger, the way to look at it is the cost of manpower or marketing team members are substantially lower than the textile chemicals also. So those products coming into picture, what is more important for us is always the EBITDA margins, what we are doing. And that is the way the volumes are also being coming up. So this is the right way to be taking it forward from going forward about it. So there is no one-time expenses which are being classified in another category of manufacturing or in the, in the P&L side.
Perfect. So EBITDA margin would remain in the range of 15 to 20% at least, right?
That has been always there for last 45, 50 quarters.
Correct.
And that's the way it will continue. Yeah.
Okay. So last question, you mentioned in your opening remarks that we can take Q1 as the base for FY23. So just wanted to confirm this Q1 to be base basically in terms of absolute numbers or in terms of YOY growth?
Well, going forward, we are looking at the absolute numbers more importantly. YOY would be having its a different trend sometimes, because as we know that the textiles are generally getting more seasonal kind of a business line. So naturally there can be small ups and downs happening. Sometimes the Diwali is coming in the quarter 3, sometimes the demand of it is coming in quarter 2, sometimes in quarter 3. So these things will keep happening, but going forward I think the way to look at it would be the absolute numbers.
Perfect. No sir, this is quite helpful and quite assuring. So that's all from my side. Thank you so much, sir. And all the best for the future.
Thank you so much, Guntaji.
Thank you. The next question is from the line of Siddharth Agrawal from Systematic. Please go ahead.
Yeah, good afternoon, Sanjay ji. How are you doing?
Good afternoon, sir. Yes.
Okay, sir, we've been following the company for a long time. Now, just wanted to understand what kind of vision do we have for the next 5 years for Fineotex? This is my first question, and then I'll ask my second after that.
Actually, what we have been always looking at also in the opening remarks and the points which I mentioned, that we are looking at our Fineotex to be one of the important companies in the specialty segments of India. So that is what we would like to be positioned as, and also going forward, we are in the right direction, I think so. And the kind of, our team performance which is happening around, I think the 5 years would be quite exciting for us, which we have never seen before. So this is what I could, come up to answer your question.
So that's perfect. So any guidance in terms of, turnover expectations in 5 years or profit expectations, anything?
We will refrain from giving any forward-looking statements and, things like that on this line. But as if you see our last, let's say, 5, 6, 7, 8 quarters, so you will be always seeing some good trends happening. And we will continue to make such progress. And things are going quite okay for us. And the volume growth is also there. We have increased our capacity also. And at the same time, I would like to mention there has been a substantial betterment in the working capital requirements. So that is also which we have worked upon. And the cash flows are also we are still a debt-free company, and there is a great headwind. There is a lot of scope in the expansion and the kind of order books which we are looking at in the coming times. So I think everything is going as per our plan.
That's great, sir. And my second and last question is that have you added any new customers in the last 6 months which are going to add a lot of benefit for our top line going forward in the next 2 years?
See, there are many such customers we keep adding in textiles also, in cleaning also. It's not one type of, there are numerous names which are there. So we would like to not discuss too many names on this call.
Yeah,
but
not names,
most of the leading textile companies and most of the leading detergent FMCG brand makers, and a lot of, they are using our hygiene and cleaning product lines. So things are going in the right direction for us. Yeah.
Sure, sir. Thanks a lot and all the best. Thank you.
Thank you, Agarwalji. Thank you.
Thank you. The next question is from the line of Rishabh Dukar from CD Equisearch. Please go ahead.
Good afternoon.
Good afternoon.
So what is the contribution of your top 50 products to overall top line?
See, I can say from the point of view, we have been working on the top 10 product lines, and the top 10 products are contributing to almost 18% of the revenue. And along with that, if I want to answer, the top 10 customers are also contributing to 25% of the revenue in the standalone numbers.
But the top 50 products, could you say?
We can come back to your point. You may also approach our team on that. We could answer it specifically also, but generally the top 10 products which we said is contributing to 18%, 18%.
Okay.
Right.
So what sort of specialization do you people have gained by manufacturing your products in small quantities?
Well, the point here would be one has to look at our company as a solution provider and also providing a lot of technical services. So let me also go back to the general updates which I always share to our analysts and investors in all the con calls. See, textile basically has 4 different processes: pre-treatment, dyeing, finishing, printing. All these 4 processes require 25 different functional chemicals. All these 25 functional chemicals together contribute only 3% cost to the user. So the cost is negligible per product. It's 0.15% for the customer. At the same time, many products move in packages. We are here to offer packages products together to the customers in a way which can make them more depending on us, and we can get a better wallet share. So making product lines and having the entire portfolio is very important for us to serve the customers' needs and thereby increasing our more exposure to the customers in terms of having a better wallet share. So it's very important to have all the product range in our product offering.
So if I may ask, specific to manufacturing related, what sort of competitive advantage do you have?
See, competitive advantage is that it's not a capex-driven businesses. These businesses are more on solution-driven, number one. At the same time, like I said, it is like the salt of the food. we are not selling products on COA basis. This is not acetic acid. This is not like soda ash that everybody's acetic acid of Luxi, China or Gujarat Narmada has to be the same. We needless to mention. It's not a COA driven businesses. It's more about a competitive USP in which we understand the customer's requirement and we set their products as they wanted it to be. So there is a lot of technical services involved on that. Our solutions are like, if I can give you an analogy, it's like a homeopathy solution in which the customer uses our product, they get the performance and they pay for it. It doesn't matter whether our purity is 99.9 or 1%. That does not matter for them. It's more connected with what is the performance and whether they get what they are desiring for with the use of our products. So this is a different, let's say this is the way. It's not a capex driven business where, it's not like acetic acid or an API or a soda ash. It is more about a solution driven business in which we need to have all the solutions available, and every customer is a different customer, by the way. We have to have different product lines for cotton, for polyester. It's not that the cotton products can be used in acrylic and vice versa. Again, there is a bifurcation on the machines used by the customer. If it's what kind of process they are doing, it's a continuous process or a batch-wise process. Again, so it's a very technical-driven businesses. It's not a mass selling kind of a. It's not like it's like you make this product and you can sell it to the world. It's not that commoditized chemicals. We are into a very niche specialty market, which the customers value the kind of the reliability and the dependability they have on us, and they never change the products. The entry levels and exit levels are very, very high. The products which we started to sell to Raymond in 2007 are still going on, and it will continue to go on as long as Raymond is producing that substrate. So this is, this discussion cannot get completed on this call, but I can only, mention this much considering the time limits also, that look at our company as a very specialized, positioned as a trouble solution provider company along with producing the specialty performance chemicals. That's the way to look at it.
Okay, so you talked about that you have to sell so many products because of the requirements. So how you plan to get cost advantage in manufacturing?
As you can see, we already are working on 20% EBITDA margins broadly. Now, the cost advantages is something which is not the challenge for us. More important is how quickly, how much more dependency we can work and offer to the customers. So we did a tie-up with Eurodye, which was ex-Unilever plant in Belgium. Unilever plant was bought by Eurodye Belgium, and also Eurodye had acquired the business of Stephenson from UK for the wool chemicals. Now what we did was we combined with Eurodye and started offering their product lines also in India and Asia. Eurodye was taking, so these are the strategic advantages which we have been doing to offer a better product line to our existing customers. Now, once we have these kinds of portfolios, it becomes very easy for Donier, for Jayashree, for Bhilwara Process or Raymond's to use the wool working chemicals in one solutions with our same technical people and the team members from a single point, rather they keep importing or buying or doing certain products from Europe also. So the idea here is not about exactly, to answer your point, it's not about the mass marketing or mass production which can ever affect. This is more of the conviction which the customer has on us, and then only we can be, selected by them for our range of products. That's the way it works.
Thank you. I would request Mr. Dugar to rejoin the queue for follow-up questions. The next question is from the line of Sunil Jain from Nirmal Bang Securities. Please go ahead.
Congratulations on good numbers, sir.
Thank you.
My question relate to two things. One is related to the raw material costs. Are they moving up now, or are we seeing some corrections in that? And with the corrections in the raw material prices, whether the company will be benefiting or you will need to pass it on to your customer?
Thanks so much. Whereas, let's say, the raw material prices have started correcting already, and there has been quite, reduction happening around. even in this current quarter actually. It's very rare that we have to, pass on the entire increase to the customers. That doesn't really happen in this business. But then we get a comfort in our profitability, in our margins and EBITDA margins. And also, if at all there are certain businesses where we are working on or we are working towards signing a contract, that time we can expect to, pass on this benefit to the customers, assuming that, the prices have been softening and might soften further, whether it's from indigenous India make or whether it's from China products or raw materials from wherever country it is coming from. So yes, the trend has been coming now. The raw material prices in chemicals are falling down.
Okay. So some part of benefit can be retained.
Yeah. Some part will be retained.
Sir, second question more related to your financials. If I see your consolidated revenue minus standalone revenue, the revenue has jumped substantially quarter on quarter from 50 crore to 75 crore. So just clarify, because 2 quarter back it was 26 crore and 50 crore and 75 crore. So if you can clarify on that why this is happening.
Perfect. So as I would like to mention, there is also, we have mentioned in our highlights of the India business, the Amarnath facility is under the subsidiary of Fineotex parent. So that India subsidiary is known as Fineotex Specialty Private Limited also, which is a wholly owned subsidiary of Fineotex. And that is falling under the Indian subsidiary as such. So the difference what you are seeing, the growth of Amarnath project is happening under also in the FSPL umbrella. So that is not falling in the standalone, that is falling under the console. That is the way it is. However, if you notice the way we have stated on the stock exchange outcome of the board meeting in which we have highlighted the India business, we have combined the Fineotex standalone and the FSPL, which is the Indian subsidiary of Fineotex. And that is the way we have separated and mentioned it in the covering letter to the stock exchange.
Thank you very much.
Thank you so much.
Thank you. The next question is from the line of Anurag Patil from Roha Asset Managers. Please go ahead.
Thank you for the opportunity. Sir, can you provide the breakup between 3 segments, textile, cleaning and drilling segment for Q1?
I can mention to you in a way that the volumes in cleaning and hygiene has increased, the home care and the cleaning and hygiene businesses. Whereas in the textiles, let's say there are 4 processes in the textile. One is the pre-treatment, dyeing, printing, finishing. Finishing is the most important process for us and for the customer also, because that's the most sustainable place. And every company would like to work in the finishing of textile, because finishing is such a subjective thing also, and generally the customers are very much reluctant to make any modifications. So it's a very long-term sustainable business which you can get. So the finishing volumes of textile has been going okay. There has also been a growth on that. The cleaning and hygiene has gone substantially high for us in this current quarter. If you want the percentage of it, I think almost you can say the volume-wise, we have equalized in the cleaning and hygiene and the textile as a volume point of view, which was more dependent on but however, the realization per kilo in hygiene and cleaning is always lower than the textile. The textile chemicals average realization prices are comparatively higher compared to the cleaning and hygiene businesses.
Okay. And sir, what was the operating cash flow at the end of Q1 quarter?
Well, there has been a positive cash flow on that point. If I'm not, it's almost 18 crores or something like that on that front. However, I'll just get on to the exact ones and we can again reconnect on that point.
Okay. So, sir, if you see your working capital utilization is almost negligible, but your year-end cash flows appear to be subdued. So is it just a year-end phenomena and the rest of the quarter your cash flows are stronger? Am I right in saying that?
See, we are in a very transition phase. As you can see in the last 1 year, 2 years, there has been a lot of changes, lot of capex happening around which never was done in the past in the company's history. So then what is happening is, certain capex will come in this quarter or that quarter that will also occupy a lot of operating cash. And then when the new businesses happen, also when suddenly there is a big sales growth, there has to be a lot of inventory investments and things like that, which generally happens with almost all the businesses. So I think going forward, we would be looking at like what is happening in this quarter onwards. It seems that, this will be the base for understanding our company better in the coming times. Because also if you see the January, March, what this thing you have seen, the debtors or the working capital cycle, it is because the sales has gone up in March. So that's the reason, when you compare the ratios, it's always debtors at and the closing stock at. That is the way, that would be the difference of this thing. But if you see the overall growth of the company from quarter 1 to quarter 4 and this quarter 1 financial year, I think the current quarter will be the base for the future, base measurement.
Okay, and one last question. So next 2 to 3 years, can we say all the capex requirement will be funded through internal accruals only?
So till now, all the capex investments have been done by internal accruals. Even the last 21,000 tons, which is ongoing, that is also been done by internal accruals. Going forward, yes, we hope that all the organic expansions and capex expansions will always be done by internal accruals. Or there is sufficient cash which has been generated in the quarter 1 also. And we feel that the similar cash generations are expected in the coming times. So this has also been quite useful. At the same time, there is a drop in the raw material prices. So no company is ready to have a very high inventory levels in the coming quarters. So that will also free up a lot of cash. We assume so. We believe so. So that can also support on the cash generations a lot.
Thank you. I would request Mr. Patil to rejoin the queue for follow-up questions. The next question is from the line of Karthik Soni from Satco Capital Markets. Please go ahead. Karthik Soni, your line has been unmuted. Please go ahead with your question.
It's very unclear, Margaret. Yeah. Hello?
Yes, Mr. Soni, we can hear you. Please go ahead with your question. There seems to be no response from this participant, so we'll move to the next question, which is from the line of Ankit Bansal from AB Private Limited. Please go ahead.
Hello, Sanjay sir. Congratulations on the great set of numbers.
Thank
sir,
you.
my question is, I don't know whether you have read or not. ICMR has developed a BTI strain technology, which kills mosquito and black fly larvae without harming any insect. It's similar like your AquaStrike. Sir, now ICMR will... Hello?
There is some disturbance also. Yeah, go ahead. Yeah, please. I can hear you.
Hanji, sir, ICMR has... you have listened my previous sentences?
Yeah,
Hello?
I mean, from what I could figure out, but it's...
Yeah. I read it, sir. ICMR has developed a BTI strain technology which kills mosquito and black fly larvae without infecting the insect, which is similar to your AquaStrike BCF product. Sir, now ICMR is filing a patent on it. It will progress it further and further. Sir, how will you now compete, because you were the number one in that segment? Now ICMR is a government body. It will get patents very, very, very early. Sir, what are your views on that?
See, I would like to mention to you on this point, the topic of AquaStrike VCF is on quite a low level, because anything which needs the approval from the WHO in Europe will always be obviously a time-taking job. In the last couple of years, their entire focus has been on the COVID-19 topics. That is one. Number two, of course, there can be always some developments and continuous efforts which will be done by most of the companies. Again, as you mentioned, BTI itself is the most harmful. Abate and BTI are the ones which is the most harmful basic chemicals coming from crude oil basis, from BPCL, HPCL, and that is something which is already affecting not about mosquitoes. The point is that you need to be also taking care of the aquatic life. Mosquitoes are being bred in the water, still waters where there is a lot of aquatic life. So there is a lot of topics connected to it. It doesn't flow the way we talk on this line now. There's a lot of substance, lot of facts behind it, which needs to be addressed. So it's not as easy as it sounds to be, because once you're working with regulatories of the world, it doesn't, you cannot time yourself ever. And right now, our focus for the last, so many years was always on textile specialty performance and providing technical solutions for cleaning, hygienes, and for textiles and oil and gas. So this has been always our forte area, and that's the way we have been proceeding ahead also.
Sir, my follow-up is that will we think Aquastrike the end of it?
No, it's very hard to say when such things happen or doesn't happen. Like I said, once you are talking of the world's biggest authorities on that part, especially in the COVID times, it depends on their prerogative, how quick they want to think about it or not think about it. Rest, these things keep continuing. There is nothing apart from, this is the way it works. So there is nothing more to say right now on this. As soon as we have some update, we'll always share with all of you.
Thank you. Request Mr. Bansal to rejoin the queue for follow-up questions. The next question is from the line of Aditya Mehta from GK Capital. Please go ahead.
For the great set of numbers. So, sir, last quarter we mentioned that our new capacity of 21,000 metric tons will be commercialized in June, by the June end. So, why there has been some delay? Is there a demand issue or something like that?
No, absolutely not. What has happened is certain equipment which have been ordered to the big companies of India for the boilers and others, some of their spare parts, because we have a different kind of a specification. Some of their spare parts was not imported by them, and so that delay has happened. However, as you have noticed, we still are at 65% capacity of the existing. So there is nothing which has been hindrance or anything on that. And rest the things are ongoing. There is no, it was always been, we were looking at everything to be starting from quarter 2 end of quarter 3. So we were assuming if we can do it in quarter 2 itself. But it's okay. I mean, it's not harping on the demand or anything like that. We are still able to address to our requirements and order books.
Okay. And so my second question about our Ambernath plant, we were guiding that at peak we can generate around 350 crores of turnover. Now with the mix shifting towards cleaning and hygiene products where the realizations are a little lower than textile products, so do we need to revise that guidance?
No, let me tell you how it works. Our capacity is all fungible. I mean, all the products, whatever we make in textile chemicals, whether it's phosphonation, sulfonation, polymerization, copolymer, homopolymer, third polymer, esterifications, everything is fungible in the similar capacities and the same machines. Same for the cleaning, hygiene and all the oil and gas is also being produced in the same set of the equipment. So the capacity is what is put in Ambernath is not exclusively for this or that. It is totality kind of capacity, and we can always use it for the production of different products. Having said that, yes, there is no, the detergent product lines are generally per kilo comparatively cheaper, comparatively lower than the textile chemicals, but that doesn't have to do with too much of these things. And that is the reason why you see the volume jump also to some extent. And at the same time, if you see the turnover has also jumped up. So it is nothing it is not a challenge for us or anything which we have to revise something what we have been looking. We are always envisaged that, and accordingly we are giving the projection.
And we expect the mix to remain the same between the cleaning and hygiene or textiles till the textile segment revives overall worldwide.
Actually, the textile segment, if I want to comment on that part, it's always having its own ups and downs ever since. So, like if you notice that the bed sheeting companies in quarter 2, quarter 3 last year was on super high levels, and from this year the demands are lower. So, but then what happens? There are certain quarters which takes care of 2 quarters. So going forward, it is, it's like a wavy style. The demands are always there. It's like textiles cannot be avoided by anyone. It can only be postponed to some extent. So the demand has to come back. It's a matter of time, that thing else. So that demand of textiles are also, looks like that from next month onward, or let's say from today, because August has started. I think from this month or next month onwards, it's been looking that there has been some positive things happening, because as you know, the cotton candy price, which had gone up to 110,000 Indian rupees, has dropped to almost 70,000. So now the cotton is not as expensive as it was. And of course, there are challenges for coal and other things in the textile or any company for production as such. But these things are also being met with everything is getting softer. The more it gets softer, I think industry and the demands will come back to it. And at the same time, there was a lot of pipeline goods which were in transit for the biggest brands like Walmart and Zara's and all. So most of the companies decided to let's be lower on the inventory. Let's start, ordering lesser for the Indian companies or Bangladesh or wherever they are producing their textiles from. And then once, like the current situation, things have become quite controllable, I think now is the time that they will get back to the same gear of the orders. And again, the things will keep moving on. That's what we understand as, yeah.
So any order book by which we can see how the demand is moving?
Actually, technically, if we speak, generally the textile companies, once a product is started, it is a continuous process. There is no tender. It's not like a government businesses or anything like that. So what happens here is we keep getting the orders every 2 months and then intimation. So it's a perennial thing. It is not a contract ki itne quantities ke liye hi karna hai, nothing like a government style of booking or anything. So there is no necessary of having a short PO in hand for a long-term thing. But yes, generally, some company like Vardhaman will issue for 3 months, some companies will issue for 2 months, some will issue for 1 month. And that's fine also, because we can always readjust our prices for the next quarters also then. So that's also something which we are happy about. And as we know, once the product has started, it's a perennial thing. They will not change the salt of the food. Nobody changes the salt of the food easily. So then we are happy with that kind of, permanent business. Comes zyada chalta rehta hai. If the textile companies have lesser orders, obviously they will not order so much, or they will, postpone some of the existing orders for next month or something like that. That's part of the business. Nothing to be challenged about.
So still we will be fully utilizing our Ambernath plant this year in FY23.
Yeah, we are aiming for that.
Okay. Great, sir. Great. Thanks for the clarity and all the best to you.
Thank you. The next question is from the line of Praful Siddharth from Shravas Capital Advisors. Please go ahead.
Hi, able to hear me?
Yeah, you're audible.
Yeah. So I just wanted to check on one thing. So what are the EBITDA margins you are making on just the cleaning and hygiene segment?
Let me say, the average, the blended EBITDAs have been around 18 to 19%, even for the textile also, for the detergents also, broadly.
Got it.
And because what happens in the detergent businesses, the per kilo product pricings are lower. However, the margins are similar to the textile ones. So ultimately, it is, and also it has its own better cash flows and things like that. So it is good enough for our company. This is the place where we always are there for the last 44 quarters. So I think anything which comes from 16 to 20% is always welcomed.
Sure. Thank you. That's it from my end.
Thank you so much.
Thank you. The next question is from the line of Karthik Soni from Satco Capital Markets. Please go ahead.
Hello. Hello, am I audible?
Yes, sir, you are.
Carry on.
Yeah, namaste sir. काफी अच्छे numbers हैं, so congratulations for that. So right now my question is, आपने मुझे बताया कि आपके जो product के prices है, that is like 3 or 4% to your customer, right? Overall cost.
Yeah.
So in effect, मैं ये बोल सकता हूँ कि आपके पास काफी pricing power आपके हाथ में हो सकती है. तो सर मेरा पहला इसमें सवाल ये है कि how do you decide कि हमें prices कब बढ़ाने चाहिए, कैसे बढ़ाने चाहिए? Because the customer won't mind you like if you increase the prices by 5 or 10%. So how do you decide कि हम कब price बढ़ने चाहिए हमारे product के?
So it depends on what kind of a vision we are looking with that particular customer. For example, the biggest customer in India is Vardhaman. Okay. If they are using, supposing, only few products from us, a couple of products, and we know that they can use 25 different products. So what is more important for us is how we gain a wallet share how we make the customers more dependable on us, how can we add more betterment to the customer's existing finish, and that is what is more exciting for us, क्योंकि आप जैसे ही नया प्रोडक्ट 2 का 6 करते हो और 6 प्रोडक्ट्स के लिए आपको जो 4 प्रोडक्ट्स एक्स्ट्रा मिलेंगे वो आपको 19% देके जाएगा. So rather than be happy about small 2 products and getting 2-5% extra, the focus is on the bigger picture here to become one of the biggest companies of the world in this business. So if we have this kind of a vision, it is more important to get a better wallet share in this such transitionary phase of the company. And once we are on a sizable level where we are always having a substantial wallet share of the customer, then we can think about, what you mentioned about of a small increase. That time the small increase will also give a big increase in terms of absolute numbers. So the strategy is very clear. Market penetration is also going on. Obviously, with market penetration, we are not compromising with our EBITDA margins. So this is the strategy. We do not want to, arm twist anything, or this is the way we are looking at. Obviously, when there is a cost rise, we go to them, and they have to also understand the position, because at the end of, obviously, if there is a big increase in the raw material price or something like this, which is not happening today, by the way. So then, of course, we have been in the past also going towards them, appealing to them, and these things happen. But the focus is bigger picture, not a smaller picture. We are here for long term. We do not want to be happy with the small gains which we just talk about.
Thank you. Ladies and gentlemen, due to time constraints, this was the last question for today. I now hand the conference over to Mr. Sanjay Subrawala for closing comments.
Thank you, everyone, and nice addressing some of your questions. Please be free to contact our team, Churchgate team, Mr. Bharat Modi, who is handling our investor relations, also myself. We are all accessible company, and we are here to answer you. 1 hour is never be enough to answer anybody's questions for sure. So with that, I would like to wish you a very good day and a week ahead. And thank you so much for joining us. Thank you very much. Over to you.
Thank you. Thank you. On behalf of Fineotex Chemicals Limited,